This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. I want to give a stock market update, and I'm going to go through a couple different indices this week. But I do want to spend some time on the S&P and make sure we're staying on top of that one. So let's go ahead and get started with the review. So with the 4 time frames, I mean, the one thing that you want to recognize when you look at this monthly chart, you see how we have this tail that formed, but it's below the 18-month line. And the longer this takes to push back up, the higher the probability the 18 on the monthly chart is going to start to flatten out. Okay, and that's really a pretty big negative if it plays out that way. So we want to just kind of key off that. As long as price stays below this, the higher the probability that this line starts to flatten. As I've mentioned, the MACD had already turned down. So I'm sort of thinking that any kind of a rally is going to be met with resistance anyway. At first, at least, in a lot of cases, the way it plays out is a move up and then kind of a failure and then a move back down, something like that. So I think we're into some kind of a consolidation pattern. But if this can't get going here pretty soon, as I get into the smaller time frames, you're going to see that we could have some risk right away. So look at the weekly chart. So one of the things that I wanted to show, in fact, I'm going to leave all these up, but I'm going to zero in on them so you can see them a little bit more closely. So first thing is, and the way I teach this when I'm doing the one-on-ones and stuff, is my recommendation is to learn each indicator on its own, by itself. Okay, so learn price structure using the zigzag indicator by itself with nothing else on the screen. All right, and then take the zigzag off and use the moving averages. I use an 18 and a 40. I get a lot of questions about why I use an 18. It came from a book called The Magic of Moving Averages that was written a long time ago for commodities. And when I read it, I was trading intraday, doing a lot of S&P mini trading and stuff like that. I found it to be very useful. So I started to look at it and apply it to longer term stock patterns and found it to be incredibly helpful. So from that point on, it's been about 25 years. I've been using that as a tool. I haven't changed that 18 and 40. Now, I used to use a 20 before that, so it wasn't much of a change. I used a 20 and a 50. I just switched from an 18 and a 40 because I like the way the two work together. Okay, so if you read my book or anything like that, you're going to see any of the other videos that talks about that. You're going to get a much better idea of why I use them together as a buddy system. So with that said, I wanted to go over all that. But if I'm looking at just MACD, forget about ADX for a second. Let's just look at the MACD. On the weekly chart, I have, well, first of all, on the monthly, I've already mentioned that we've crossed over and we have room to the zero line. That's number one. Number two, we've got a higher low here, a higher low here, and then an inside tiny little week. It was actually a narrow range week, and a pinch that formed here. Okay. Now, this move to the upside found resistance at the 40-day, but notice how this is a zero line reversal. So what we did was we lingered enough going sideways over the course of the week to get this MACD pretty close to the zero line. I mean, it's not exactly there, but it's close enough. And then on the hourly chart, I'm going to zero in on this so you can see a little bit better. It crossed down through the zero line and formed a little pinch. You see this higher bottom, higher bottom. So we had a pinch play, a zero line reversal, and then another pinch play right before the breakdown that took place just here. So I want you to think about this in these terms. Like when you get a pinch play on one time frame, the lower time frame should, in a lot of cases, will be a zero line reversal. In a lot of cases, not every time, but a lot of cases. Okay, and so just keep that in mind using those two patterns together. Now, I'm not saying that this was generally the greatest short of all time, and one of the things that I wanted to point out here is the volume. Okay, this is what's been bugging me. So we had this move to the upside, and notice how we didn't have one abnormal volume day. And then we've been pausing here. We had a really pretty good day here, and the volume was actually less than it was the day before. And then we had a down start to the day and then finish the day to the upside. And look at that. It's like one of the lightest volume days going back. It's almost one of the lightest volume days of the year. Now, even today, very ugly day, right? We tried to move up, we gapped down, tried to move back up, and then came back down, ended up closing below the 18-day moving average. Look at the volume. You can't even consider this a distribution day because the volume isn't bigger than the day before. So based on that, it's hard to draw too many conclusions about whether we're starting a whole new leg to the downside. I mean, I don't like this pattern. I don't like the pinch play and all that. But again, this was a pretty good low at that point. The fact that we broke the trend line, I've been waiting for a 2 to develop. And based on the volume action, I'm kind of leaning towards this being the 2. Now, the aggressive play in this situation is to short this bottom. Okay, now I'm going to talk about ADX for a second. Forget MACD. ADX showed strength on this move, confirmation of this decline, and then we got to rally back up. On this rally, look at how we had strength on the sell side. That's based on the sellers on the way down. And then the rally back up, we had no strength whatsoever. Okay, so based on those two things, that's pretty bearish. And then here, we had a really strong move. That was a really encouraging sign. But then notice what happened. We end up consolidating, and we consolidate long enough to the point where you can draw in trend lines. You can draw in pretty meaningful trend lines because, as I've said, if you get low ADX and you have about, in any time frame, you have, say, 20 to 30 bars that are forming a channel or some kind of a pattern, you can draw trend lines on price and take the trade. Now, if you notice what happened, the red actually crossed over and held 25 prior to that. So you could have taken, this is an aggressive trade, don't get me wrong, but you could have taken the break of this low, especially based on all the evidence that I had on the MACD patterns. So we had ADX and MACD both independently saying the same thing. What I have an issue about is that we broke the trend line and we're probably just coming back down to test. So it's probably a very short-term trade, probably. Now, if we end up getting volume expansion Friday, as I'm doing this Thursday as the close for Friday morning, if we end up having a really bad day Friday and we get volume expansion that suggests that maybe this is a continuation to the downside, then this trade could end up getting a lot worse. What I'm going to be looking for, though, is if we come down, I bet we come down and probably try and hold 4,000 on the S&P, 400 on the Spider, and try and get a little bit of a bounce. If that bounce has some strength to it, right? If we come back up with some vigor here, we get some move, and maybe we get some volume or something like that, then I'd feel like, okay, we've done a 1 and we've got the 2 in place. So these are the types of things we have to be watching, and we have to stay on our toes. You could be short here, still anticipating the possibility that this is a 2. This is an aggressive way to trade this, but it is a way you could be done based on what's taking place on the weekly, taking place on the daily, and the hourly. Okay, so I hope all that makes sense. But let's go ahead and look at a couple other. Let me move this. Let's go ahead and take a quick look at the Qs. We've got a very, very similar pattern. It's actually even weaker because it couldn't rally up closer to the 18. But these patterns are virtually identical. The only thing is that this is hard to qualify as a zero line reversal because it didn't really get as close. But this ADX pattern is the same. Very similar kind of low ADX pattern developed over the course on the hourly over the course of the past several days. So just looking at this, you can see the decline was pretty strong, and then the rally back up, we haven't had much volume. So it's the same concept I was talking about with the Spider, not exactly what we're looking for. The diamonds are starting to show some weakness here. Same pattern, really not a huge change. The only difference is that the momentum is not quite as strong on this, so I wouldn't expect as much downside risk in something like this. Because of the way this is playing out, there's just not a lot of momentum based on the ADX. You do have a pretty good zero line reversal developing, And so, I mean, you have to take that into account. We do have a pinch play, but again, the momentum not quite as strong. IWM has come down to a pretty big support zone. This has been the weakest of all of the big indices, and we found support from this original breakout area, and we came down and are bouncing off that. I'm not saying that this is turning to the upside. I'm just saying, like, I'm expecting support in here. Maybe it turns into more like a waste of time, or maybe it starts to outperform on the way back down. But we'll have to see. It's not a buy. It looks like it wants to come back and test these lows again. But again, there's pretty good support showing up here. Now the dollar, I wanted to add in as a potential, as a index, just because it does have an effect on a lot of the other things we're looking at. This is a pretty powerful move. Look at how the ADX is crossing above on the monthly chart, and it's up to 30 and rising with good, strong green DI. Notice the power trend, we reached 56 on the up move on the weekly. The only thing that's bugging me a little bit here is the fact that this has made this moved down, but it hasn't come close to the 18. So I would expect this to move up and come back down, maybe form another, a little bit of a higher bottom like that, something along those lines that I think would set this up a little bit better. And you could also see that pulling back potentially. Watch the pullback here. And I think that might tell us a lot, especially the people who are looking to play gold. If this is just an orderly pullback, you got to be really careful about gold because they tend to go in opposite directions. The oil chart still looks very, very good. We pulled back to the 18-week. We've got great momentum conditions in place. We're starting to lift off here. The only thing is we are up against some resistance. And it's kind of quiet in the way that it's playing out. It's not all that dynamic. We've made a decent move, and we haven't gotten the ADX here is really still pretty low. It's down in the mid-teens, so not really what I would like to see for real strong follow-through. And a lot of the individual stocks are getting overbought, so just keep that in mind. A lot of them are extended, but now they're getting overbought as well. Gold, again, a lot of might depend on what the dollar does here. We're into support. I would sort of be looking for a range to form here as opposed to any kind of real dynamic move to the upside or the downside. I just don't see it happening right this second. It doesn't look like it's in position. You broke the 18-week to the downside. You're holding the 18-month here, and there is a lot of support underneath. Okay, the 10-year rates have rallied up to this 3 area, which is a big level, okay? And I just expect to see this consolidate more. I don't think we've consolidated enough to expect this to just go busting right through that right now. I mean, it could do that, but I think if it breaks through it, I think after it does that, it'll come back and consolidate because you don't typically break out and follow through from an overbought condition, and that's where we are, especially on the monthly chart. Bitcoin. So Bitcoin is weak, and the last time I updated this, I've been saying that we don't want to fight the 18-week and the 18-day. Price continues to struggle, especially with the 18-week line. It rallied up and then came back down, and then the daily has been fighting the price has been fighting with the daily, trying to get through, but it's really not having much luck. We have a lot of strength based on the ADX on the daily chart. It's not a good pattern. This is not a good pattern, okay? So we're going to need to see real volume, real strength to turn this thing around. It's not going to sneak. You're not going to be able to sneak into this. It's not going to have a sneak attack, okay? You don't have to be a hero in this. Let this do its thing. Let it play out. You don't have to be the first guy here. You don't have to buy it at 30,500 and be the first guy in. Let it play out. Even if you're buying it at 45 or 50, play low risk, not low price. Let's get a good price for this, not try and call a bottom. Because for all I know, this is not going to hold. This might not hold this key level, and I'm not convinced that it's going to or that it's not going to. But I want to look for high quality setups, and this is not either one. If anything, if it breaks this area here, it might be a quality setup to the downside. All right, that's the update for the week. Go ahead and post any questions or comments. Thanks.